NFT whales, what are their tactics to make good money when it comes to NFT trading? In this short little video, I'm going to give my views on NFT whales and also a little bit of history about diamond handing your projects. In other words, not taking profits. Now, this is not financial advice, it's only educational. I definitely am far more aligned with the idea of taking profits. Now, of course, taking profits normally incurs some sort of tax depending on your country. So that's a question for you and your accountant. However, none of this is financial advice, but at the end of the day, profit needs to be realized for it to be in your bank so you can spend it, right? First up, some history, some important history. GameStop. The stock is GME. If you haven't heard of this, this is a bricks and mortar shop, so an actual physical store in the US where they sell video game things like PlayStations and Xboxes and computers and things like that. And so what happened a few years ago, the stock price was very, very low. And this community, Wall Street Bets, as we can see on Reddit, they started to buy the stock and also long the stock. And the reason why they were buying the stock was because Wall Street hedge funds were shorting this stock like crazy. Like we're talking $500 million or more, I can't really recall, but it was a huge amount. We won't get into the shorting kind of mechanics necessarily, but what I'll just say is if this is the price to buy the stock, if you want to short it, you have to borrow stock from someone else and then you have to sell it, causing that price to go down. And then as soon as this price goes down to say $6, you may rebuy them, give them back to the person that you borrowed them from, whoever that person may be, some other institution. And then there's also some sort of interest that you may pay as well. And that's how you make money with shorting. So what they basically noticed was there was a huge amount of shorting going on. So as a community, they rallied behind this and this stock went up from like $7 or maybe it even went from like $2 and it shot up like crazy. We can see it reach an all-time high of $466. Now that means the hedge funds were literally losing hundreds of millions, if not billions of dollars on their short positions. And this was just done by a community just rallying behind an idea. It was not valued at $466 by traditional metrics and it collapsed. But we'll go over that kind of briefly in a second. I'll show you another chart in a second, but in July 2022, GameStop did a 4-for-1 stock split. So if you had one stock that was split into 4 stocks, and then if they were worth $400 initially, then you have 4 stocks that are worth $100. So at TradingView, if we have a look at GME, the top here we can see is like $120, $121. So this is after the split. Different exchanges will have it listed at different amounts depending on where you could buy it. And we go to approximately what the price is now. It's gone down 89%. So anyone that was diamond handing it initially and didn't sell at any stage on the way down missed out on potentially millions of dollars. This is what can be quite common, to basically never list something, to never sell, to never take profit. Now, as I mentioned, this is certainly not financial advice. It never ever will be. But if you bought it down here and it pumped to here, and you sold a little bit, 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 and then you had a moon bag, and then it got pretty crazy, and then you sold a little bit, and then it came on down, and you sold a little bit, you would at least be significantly in profit. If you got it here, it went up and then up and down and up and down, and you didn't sell anything, you just held that bag, then at the end, you're slightly in profit. But if you bought it like here and didn't sell it at any other stage, you would be down considerably. Now, some people may say that GameStop was a bit of a meme stock. It's an actual listed SEC stock. However, you could do a similar thing with the top with Tesla down to the bottom. This was a considerable drop, like 75%. A lot of your money just vaporized, especially if you kind of bought here and now it's starting to recover. That's fine. And maybe in the future will go a lot higher. There are taxes that need to be considered when you're selling things as well, of course. But the general view is taking profits, it's not a silly thing. It's a smart thing to take profits. Not financial advice, but it's a smart thing. This is what whales do. We can do this with so many stocks. We can show you with Meta, like, one of the biggest companies in the world, down 77% from the top to the low. Now it's recovered significantly, but just keep that sort of thing in mind. So what about crypto whales? On different blockchains, there's different whales out there. Quite often they'll have different addresses. There are so many strategies that they use, but one thing in common is they take profits. So I'm gonna draw some attention to a couple of them. Now, NFT Doctor, I really like him. His PFP is a Solana Boogle. So Boogles are like kind of an exclusive 100 only community, and they sell for like 2,000 Sol or something pretty crazy. And he himself, he's got like, I don't know what he came from, maybe $10,000 or less, but he's built it up to like $1 million portfolio as far as I'm aware. And one thing that will happen with these smart dudes is they will get pre-sale spots allocated to them. They will play the game, or they will take profit at different areas, or they will promote it in a non-shilly way. Some of them, most of them won't really shill it in a silly way, but they'll basically show that it's a cool community, and they will take profits throughout that time. Now, I don't know what he's holding right now. We could look on chain and potentially work it out, but I know that he was playing the heist, and then he sold some of the NFTs from the heist, making a good profit. And now he's playing the reavers. Maybe he sold the reavers. I'm not really sure. But it's just important to note that you are subjected to the whims of whales. If a whale sells, if they sell 100 NFTs, the price will go down. If they sell a few at a time, the price will go down maybe gradually. Or if they buy a few at a time, or if they buy 100, the price will go up. So you just need to be aware that whale tactics are all about taking profits and not being emotionally connected to your NFTs. This is not true of all Boogles, but if you see this PFP, you can basically know that they're a part of a private exclusive club. They invest in ecosystem tools, they invest in companies, they do all sorts of things. And one thing that, the rich do to get richer, which we all want to do, is they take profits. So just be fully aware of that. I love these guys, and having them as part of your community is completely good. It's a good thing, but just be aware that they take profits like everybody else. There are other groups out there as well, like Dead King Society. You'll quite often see it as DKS, and they are once again similar. They get access to pre-sales, they like something, they go in on something, hype kind of generates, and they take profits. It's a standard practice. There's nothing wrong with it. You are entitled to buy or sell on the blockchain whenever you like. And what sometimes happens is sell shaming. There's no point in sell shaming. Someone's free to do what they want. It's up to the team and the community to make that project better and better. Just be fully aware of the simple fact that whales do sell. And there are tools out there such as Hello Moon, which kind of shows what smart money's doing. And we can cover that in another video, but just get that viewpoint into your mind. Whales sell, they take profits. It's always been like that. It always will be like that. It's a smart thing to do, so adopt it. Don't marry your bags. Patty makes a valid point. 99% of NFT projects fail, and 1% of traders are profitable. Normally 1% of traders, we're referring to just traditional buying Bitcoin, selling Bitcoin, buying Solana, etc. But you could also put NFT trades in here as well. NFT trading is easier, I would say, but it requires kind of more research and less technical analysis, more kind of fundamental or what's hot on the timeline, as opposed to actual kind of volume. But it's probably a mixture of both. I don't do either, so I'm not like an authority on the subject. But this is just a valid point just to keep in mind. If you're getting into NFTs to try and become rich, it's kind of completely risky. You're probably better off just sticking with a dollar cost average in different coins that you think have value, and of course, not financial advice, and then starting to learn about NFTs and seeing if you can just make connections. One of the best things about NFTs are connections. HODL, make connections, and boom. If you own a lot of something, the price goes up, you may want to sell some, but you may want to keep some in order to keep those connections to those people in that community. They may have some alpha, they may have in real life solutions for you, you may be able to help them, they may be able to hire you in some capacity. There are so many different things. You might go to a conference and meet them and align goals. It is endless. It's all about networking, and this is kind of the future of networking in a way. If you have the same PFP, if you're part of the same community, or if you have quite a few different NFTs, you have access, in a sense, to their community. And as long as you treat them right, they will welcome you in. So in summary, you can be like this person who's now deleted themselves off Reddit. You can buy 27,000 shares, an average cost of $7.29. You can be up $5.7 million, and you cannot sell. And that's entirely up to you. Or you can be like the whales, don't marry your bags, find value in the ecosystem, add value to the ecosystem, take profits, and hopefully grow your bags. I think you get the point. So stay curious, and we'll catch you in the next video.